Welcome back. We're ready for the live sell-side Q&A. To ask a question, please click on the reactions button towards the bottom of your Zoom screen, then select the raise hand icon to be added to the queue. All other investors can ask a question using the submit a question button in the agenda. We will try to take as many questions as we can, but we will be prioritizing live questions, so we may not get to everyone. As the queue forms, I want to highlight that all of today's presenters are available to take your questions. Sasan will either take your question or direct it to a member of his team. Okay, let's get started. Our first question comes from Siddhi Panigrahi. Siddhi?
Thank you. Thanks for hosting this event, and kudos to Kim and her team. So I have two questions, starting with the QBO. Your QBO customer base grew almost 16% in fiscal 21. That was pretty impressive given the pandemic time. And also even ARPC grew 13%, which I assume mostly driven by mix shift to the higher ASP product. So as you're looking into FY22, what sort of trends are you seeing in new business acquisition to drive that QBO base? And also, are you expecting the same kind of mix shift in the QBO base for ARPC?
Great, Siddhi, thank you for your question, and very nice to see you. You know, first of all, the way we want you all to be thinking about your models and the way we think about growth is we expect customers to grow between 10 to 20% and ARPC to grow between 10 to 20%. If you exclude what's coming into our family with MailChimp, the businesses that start brand new are not immediately the businesses that begin to use QuickBooks. There is a lag time between new businesses and when they start using our platform to do things like estimating and invoicing and getting paid, et cetera. And so we are really benefiting as you look back the last 18 months and the great momentum that we have right now. We're simply benefiting from more and more customers shifting to virtual solutions, accelerating shift to using online, and ultimately really looking at QuickBooks as a platform to be able to fuel their growth. And so we expect that momentum to continue. Now, what's very exciting is when we join forces with MailChimp, we'll actually be positioned to help even businesses that first start out their business because they're trying to figure out, how do I get my business online? How do I get a website up? How do I get my store up? How do I actually market my business on digital platforms? And so we're going to now be able to leverage the power of MailChimp to help customers get their business started and then ultimately help them with things that matter most, which is invoicing, getting paid, access to capital. So that's the way you should be thinking about it. But the headline news is our momentum continues, and we would expect this year that we will be in the range of 10 to 20% customer growth and 10 to 20% ARPC growth.
Okay, that's great. And then another follow-up to QuickBooks Payments, if you think that seems to be a very powerful platform that you have with your own payment processor as well. So right now, you mostly use it for QuickBooks customer, but what sort of opportunity you're seeing on the payment side now that you have MailChimp and Credit Karma? Basically, I'm thinking about like now you have commerce with MailChimp and even like consumer payment. Do you see the opportunity to leverage in both that platform?
Yeah, sure. Maybe let me tee it up and would invite Alex if he wants to add to this perspective. First of all, I think Alex did a wonderful job of laying out really our money platform and all the innovation that's happening across money movement, from e-invoicing to making payments easier to helping you access capital to giving you business banking capabilities, with QuickBooks Cash, and of course all the employee management capabilities through our payroll offering. And so we are really positioned based on the investment in the prior years and the innovation that you heard from Alex and Rania and Cassie earlier. We're very well positioned to help small businesses with all of their money needs. Now, the beautiful thing is, as you asked, when MailChimp comes in, we can ensure everything is payment enabled. So that, if you have a purchase button on the website, you can ultimately have it all payment enabled and leverage all the payment capabilities that we have across the company. With that said, let me just see, Alex, if you'd like to chime in.
Yeah, absolutely. So those examples that we have from the entire investment that we've made over the years with money movement in general will allow us to accelerate what we're getting with MailChimp as well. So just to give you a couple of examples, Sasan used the example of a commerce website. MailChimp also allows appointments. So you can imagine someone being able to create an appointment and actually purchase online with an embedded purchase flow, as well as just being able to have an email being sent out or some sort of engagement where now they can actually take payment right there embedded in the experience. So we think those opportunities to come together will create a lot of interesting synergies for us.
Great, thanks for your question, Citi. Next question is from Brent Thill.
Thanks, Sasan. As a small business owner that uses Intuit, I think we can all dream of a lot of solutions that we can consolidate onto your platform with the MailChimp front office to back office. Now, when you think about just the low-hanging fruit and the excitement around this, how would you frame kind of the first wave of integration and what you think you can achieve? And I'm curious if you could also maybe Michelle or someone else just follow up in terms of some of the financial profile of the company. There's in terms of profitability and where they're at today, and ultimately kind of how you see this going forward financially.
All right, Brent. Well, thank you for your question, and very nice to see you. Let me set the stage, and then I'll invite Alex to see what I've missed in this opportunity that we believe is fundamentally game-changing for our customers. One of the things that we are very excited about is Alex, his team, and the MailChimp team have declared a very clear set of priorities that are all about acceleration. And the three priorities are, first and foremost, to create a one platform where you can grow your business and run your business in one place. Now, for the customer, it will be seamless. And we've actually begun this process months ago when we actually started as partners with MailChimp, integrating them onto the platform. So from a customer perspective, it'll be very seamless and it will deliver against the tasks that they want to complete. But that's the first priority, is to create, in essence, one platform. And it's really about the magic that will happen behind the scenes where the power of the data, both the customer data and the purchase data, will be in one place so we can fuel the insights and the decisions of the small business. So that's the first priority. The second priority is taking that game to upmarket. As you know, about 2 years ago, we declared with our global online platform, QuickBooks Advanced, to move to mid-market. And the progress has been staggering. You heard this from Kelly and Bobby earlier. And we will now take our combined growth platform to the mid-market. And the need is significant in the mid-market. And frankly, MailChimp is where we were several years ago, where sometimes they lose some of their larger customers, to others, but they actually have all the capabilities that you need to go to market today. And so that's going to be the second priority, is really winning and disrupting mid-market, which is where it fits into our Big Bet 5. And the third is, a stat that you heard both I and Alex talk about earlier. 50% of MailChimp's customers and revenue is outside of the U.S. And other than very important work that they've done to localize the platform, they've actually not spent much time in their go-to-market efforts. And so we are excited with our third acceleration priority to really accelerate a global acceleration, both in the US and outside of the US. So those are our three acceleration priorities that we've really galvanized our teams and the MailChimp team around what we want to execute. And again, the foundational element is all about the data and the technology. So that's what our plan is. That's what our focus is from day one. And Alex, I just invite you if there's anything more you want to add to our game plan.
Yeah, thank you, Sasan. So, I mentioned previously the opportunity we have to bring our money portfolio into the MailChimp user experience. Let me share a little bit about the other direction as well. We have over 8 million customers in the QuickBooks ecosystem. And over 2/3 of them say that getting customers is their number one challenge. Well, they're actually using QuickBooks as sort of their proxy CRM today. We have over 4 billion customer records stored within QuickBooks. But other than being able to send an invoice or an estimate, we really don't enable our customers to engage with their customers, to be able to prioritize them, to be able to find out who their high-value customers are and engage with them in a CRM or any type of conversation. That's what MailChimp's going to be able to enable us to do. Take those 4 billion customer records and suddenly give our customers the ability to have a conversation, understand who their best customers are, be able to target them in the right way, be able to have a single source of truth for their customer record as well as their business. So really it is expanding our capability to be able to help our customers not only run their business, but grow their business.
And maybe if I could just add a few things on the financials that you asked about. First of all, after close, we will share more around not only what you can expect in terms of guidance, but the financial profiles. But the few things that I would want to remind us of that actually gets us, very excited is, first of all, it's a highly reoccurring business. It's a subscription business, just like QuickBooks is. 800 million growing at 20% in fiscal year 20. And actually quite profitable. And this showed up in what we communicated when we made the announcement that the 3 priorities that I just mentioned, a few of them will actually take a bit more investment, especially on the marketing side. That's already included in our thought process moving forward. And therefore, we believe that it will be accretive in the fiscal year that we are in. So it tells you a little bit about the profitability and the scale of the platform.
Great. Thanks so much for your question, Brent. Next question is from Michael Turin.
Hey there. Thanks again for hosting. Informative as always. Michelle, you spent some time just discussing some of the margin trade-offs and what's driving some of the near-term dynamics there. Can you also, just as part of that discussion, talk about the use of M&A, the appetite as part of just taking advantage of the opportunity sets you have in front of you with some of those near-term margin impacts and trade-offs that you're seeing?
Hi, thank you for the question. Yes, we're very excited about the opportunities that we see going forward for continuing to leverage the platform that we have and to be able to expand margins in the future. We see that across the company, across multiple P&L lines, whether that's in technology, customer success, or in our go-to-market areas. And we're very excited about that. And we do believe that there are also opportunities, as you mentioned, for M&A. We look at M&A as an opportunity to, whether we're adding talent or we are looking at filling out our roadmap. But we do see more opportunities for that. First, we would like to, get MailChimp closed, which we expect to have closed at the end of Q2. But we do think that we will have opportunities going forward, as we've seen with Credit Karma and with MailChimp, really being able to focus on some of the key innovations that we think we can make a lot more progress with from an acquisition standpoint versus developing inside.
Thank you.
Thanks so much for your question, Michael. Next question is coming from Kirk Materne.
Okay, thanks very much. And I'll echo the thanks for the presentation today. Sasan, I was wondering if you could just talk a little bit about the global nature of the opportunity in your view. You mentioned that MailChimp is bringing you obviously a business that's a little bit more balanced, I guess, from an international perspective. Greg mentioned obviously the opportunity to go after, the opportunity to consumer more globally. How are you thinking about sort of the international opportunity maybe today versus a few years ago? And what are sort of, how are you measuring success from an international perspective so that, when you talk about powering prosperity around the globe, that last part of the phrase, really resonates with people? Thanks.
Yep, thank you. Thank you for your question, and very nice to see you. There's 2 dimensions that maybe I can use to paint the picture. The first one is we are very intentional about leveraging our investments across horizons, Horizon 1, 2, and 3. And when we look at our international investments, some of the investments by geography fall into different horizons. And Horizon 1, again, is more 0 to the next 18 months. Horizon 2 is 18 to 36 months. And then Horizon 3 is 36 months plus. And so when we look at Canada, UK, and Australia, they actually fall into Horizon 2. And we view those countries as countries where there's product market fit. Now, there's never a destination with product market fit. There's always an opportunity to fill out your platform, which is what we're doing in those 3 countries. But really, the key success measures in those countries are continued customer growth, increasing our share, which means we're serving more and more customers. And ultimately, we have a different expectations on LTV to CAC and the revenue that we would expect from those countries. And then when you look at countries like France and Brazil and what we put in bucket of rest of world, H3 ideas are all 36 months out, which means we're really continuing to focus on solving the most important customer problems, net promoter, customer virality, and we have a lower LTV to CAC expectations in those countries because we're really focused on creating a network advantage. And that means when you look at our rest of world bucket, we have more countries that are now in compliance from an accounting platform perspective in rest of world. And we use that as a really experimentation and testing bed. And depending on what we learn, there can be new countries in H3, which eventually could come and become Horizon 2 countries. With all of that said, in terms of how we think about international, and by the way, we are more excited about the possibilities in international today than we were even a couple of years ago, because we believe that, one, it truly serves our mission and truly is a growth opportunity for the company. When you look back 5 to 10 years from now, we expect more of our revenue to be outside of the US than it is today. And MailChimp really propels that. I know we've shared our excitement around this, but frankly, we've been surprised as to the fact that 50% of customers and revenue of MailChimp are outside of the US, and what they've really done is localize it. Now, I'm downplaying that a little bit. The only reason they have got that kind of attraction is because the platform is self-serve. It is easy to use, no sales, no customer success, but customers, small businesses are using it to be able to grow their business. And I think now with the combination of the two of us, international becomes a lot even more interesting than it already was, because one, we have now new ways to penetrate the market where we can just help customers get up and started. And then when they need all the other capabilities of the QuickBooks platform and what we can do with the data, it positions us much more strongly outside of the US, as it does in the US, than it did yesterday. So that's how we think about international. Headline news is big long-term potential. We're excited about it, and we strongly believe that with MailChimp and QuickBooks becoming one platform, it really paints a whole different picture of what the opportunities are as we look ahead.
Super. Thanks, Sasan.
Very welcome.
Thanks so much for your question, Kirk. Next question is from Scott Schneeberger.
Thanks very much, and very well organized as always. Appreciate it. 2 questions, Sasan, probably for you and or Greg. First on TurboTax, the second one on staffing and TurboTax Live and QuickBooks Live. So the first one is, I was noticing in the slides that the TurboTax key drivers for growth, that updated this year versus years past, where it looks like you anticipate getting a bit less growth from category share, do-it-yourself category share going forward, and a little bit more lift from revenue per return, which Greg did mention. Just want to know a little bit more about what is behind that. And then for the second question, I can repeat it later if helpful, but just get it out there quickly. If you could speak to TurboTax Live this season, and just relative to the pandemic season before and more normalized upstart seasons prior to that, what your lessons learned were from staffing that, how you're looking at that going forward, and then the QuickBooks Live part, because it's less seasonal and something you may be encountering now. Obviously, labor shortage is an issue. I would think not for your business. It might, with work from home, it might be an opportunity. But any issues with QuickBooks Live staffing and developments there? Thanks, Sasan.
Yep. Great to see you, Scott. Thank you for your question. Let me maybe tee it up, and I would like for you to hear from Greg as well, and maybe at the end, both Greg and I can tag team on your question around the Live platform, in general. First of all, we are 3 years plus in declaring 2 things that are very important strategic bets that we've made. One is about going after under-penetrated segments. The other is about transforming the assisted segment. Now, there's overlap between the two, but for us, they are distinct opportunities. And in that context, being several years in executing against that plan, What we continue to grow confidence in is the fact that we can serve these customers, we can have a platform that becomes a better method than the method that they used to use, and these are just higher priced products, and therefore that increases ARPC. I know you hear almost the same thing from me in the last couple of years. I would just remind us, we're in the very early innings. There is, almost 90 million people that use the assisted method. And there's over a $20 billion opportunity in the assisted segment. And we're going into our fourth year with the live platform that not only serves the assisted segment, but also targets the underpenetrated segments. And so we have a lot of confidence as we look ahead, not only continuing to lean on our learnings and our experimentation and the velocity and the pace of innovation to serve these customers, but also to be able to increase our velocity, our ARPC, which is why you saw what Greg shared at the end, changing and increasing our ARPC expectations as a lever to grow the business. With that said, Greg, I'd invite you to please add and share your perspective.
Yes, Hassan, maybe just reinforcing your point. What we see is that our average revenue per return is growing. Our mix is becoming more favorable, particularly as we go after segments like self-employed, investor, and with full service, that's going to open up opportunities for us to even grow average revenue per return even faster. The math associated with that yields a little bit change in our sensitivity, where we might have been at 3 to 5% before for a point of DIY growth, now it's at 2 to 4. But the value of our average revenue per return growing now has gone up from where it used to be, from 3% to 4+%. So fundamentally, the growth drivers are really exciting. Our growth is driven by innovation, and our outlook of 8 to 12% growth and bias more towards double-digit growth in the future is absolutely, exciting for us.
Maybe now I can take the question that you asked around experts and the live platform. This is one of the wonderful things about having Mark and his team that looks after the live platform across the company, inclusive of how we think about experts. I think it's important to state that this is all technology driven and AI driven. And so this is really about how do we leverage technology to make our experts efficient, effective at what they do. I start there to say that actually informs not only the number of new hires, but also their experience. With that said, their experience, really sits on the incredible culture that we have. One of the reasons the net promoter of our experts went up is they love our culture. They love what we stand for. They love how much focus we have on our employees and growing our employees, but also how customer back we are and the innovation that they see on the platform. The more we can make our platform smarter, the more we can deliver insights for them, the more we can make it easier for them to do their job, the more they actually want to be a part of our platform. And so we continue to have a number of experts that return from the prior year because they love being part of the Intuit culture and delivering for our customers. They also love the variety of the work because now they can help customers in tax time, and some of them can help customers that are small businesses being part of the QuickBooks Live platform. So we have a lot of confidence in the ramp that we expect in bringing experts on board. And part of that confidence is actually the culture that we have as a company, what we stand for, and the experience that they have on our platform. Now, last thing I would say is our expectations are very high for experts because this is now, you're truly talking about, service as a software where they are the interface to customers. And the standard in which we expect them to deliver for customers, the value that we expect them to create is very, very high. And that not only inspires them, but it actually attracts great talent that wants to be part of a high-performing culture. So net, it's not easy to find the right folks, but we have our ways and methods, and our culture brings a lot of them back, which is a wonderful place to be.
Thanks very much.
Thanks so much for your question, Scott. Next question is from Kartik Mehta.
Two questions. First is on big picture. Obviously, MailChimp gets you into the front office. You've talked about the opportunity there. I'm wondering from a other product standpoint, what other products you think you could really leverage that QuickBooks infrastructure you have?
Yeah, Kartik, good to see you, and thank you for your question. I would just say, for the time being, in context of our strategy, in context of the bets that we've declared, across the company, our focus, which is really important when you look at an acquisition, we're very intentional about focusing on acceleration versus just integration, and we're very focused on momentum. And momentum is created by doing what's right for each employee and making sure that there's a real impact for customers. And so I think the first part of the answer I would give you is we have a lot of capabilities on the QuickBooks platform. I think Alex and his team, when we went through the platform immersion, demonstrated all the capabilities that we have. And now bringing on MailChimp, it really expands our capabilities to help customers grow their business and run their business. So really our focus right now is to create this one platform where it becomes seamless for customers, and the real innovation will actually happen behind the scenes with the data and AI. And then we will continue to see where that leads us over time and what other capabilities we want to build internally, what that may mean in terms of gaps that we have. But right now, looking ahead, we love the capabilities that we have coming together, plus all of the internal innovation, which you only saw a small glimpse of it today. And so we're right now just focused on our own roadmap, bringing these capabilities together to make a huge impact for customers. And of course, in the future, if there's any other big gaps and opportunities, we'll share it with you all.
And then just on Credit Karma, I was wondering what kind of pricing opportunity there is, especially today when you see credit card issuers really fighting each other to get that next customer. So I'm wondering over the years what kind of pricing opportunity Credit Karma has had and what they have going forward, especially with Lightbox coming online.
Yeah, you know what? This is a great question for Ken. I'd love for you all to hear from him. So let me turn it over to Ken.
Yeah, thanks for the question. So, our primary focus is not on pricing. It's actually on the consumer experience. So for us, what we are, focused our time, effort, our technology on is ensuring that, those 80% of subprime consumers who are getting declined for a product, that they get approved and they get a good experience. What we focus on is the certainty and the simplicity. What we find is that most consumers aren't taking advantage of great financial products because there's too much friction in the space, there's too much uncertainty, and the pricing transparency doesn't exist. So for us, from a technology perspective, from a data perspective, from a partnership with Intuit and everything that we do together, it's about that mission, and that's where our primary focus is today. And we think with that, we'll be able to drive, greater market share, greater share of transactions, and that's what's key for us. That is our focus, is driving benefit to our members. And the pricing pieces come over time, but key and central to our thesis is our focus on our members, and driving great value for each and every one of them.
Well, thank you, and Sasan, good luck to the Clippers.
Thank you. Good luck to the Cavs.
Thanks so much for your question, Kartik. Next question comes from Ken Wong.
Hey, great seeing everyone today. Glad you guys could host this event. I had a question for, I guess it could be Sasan, Greg, or Ken. Try to tag as many of you guys as possible. During the immersion session, we saw a demo where a TurboTax Live rep advised the client on the potential tax implications on a Credit Karma mortgage. Do you see potential opportunities the other way, where perhaps a TurboTax Live accountant might interact with a customer to cross-sell some of the Credit Karma functionality, just for kind of a general kind of consumer wellness purpose, whether it's, again, maybe mortgage, maybe it's insurance, maybe it's wealth management?
Yeah, Ken, very good to see you. And I actually love your question because, one, I will tag team. I'll turn it over to Ken first, and then Ken can hand it over to Greg. What I love about your question is it's very much customer back, and that's why we are putting the capabilities of these assets together and creating one platform, because our ultimate goal is to help customers make ends meet. It's to help them connect to financial products that are right for them, and ultimately be able to find ways to put more money in their pocket, inclusive of the largest tax refund, and have expertise and advice at their fingertip. And it could be all automated, or it could be an expert that comes online to engage customers with whatever question that they have. So maybe with that as context, because in essence, your question articulates our strategy and the areas of our priorities. Let me turn it over to Ken to maybe take the first part of your question, and then Greg can chime in.
So the short answer is absolutely. The longer, more detailed answer is, when you think about it, most of us realize that we can save money just simply by refinancing. But if you think about the friction associated with refinancing a mortgage, for example, we know that we have to go and gather our W-2s. We know that we have to be credit qualified. We know we're going to have to send faxes back and forth around their paychecks and how much in terms of other dollars that we have. And that's a friction point that keeps consumers from doing what they should do. And this is where the AI platform, the partnership with Intuit and TurboTax really make a difference. We actually have all of that data centralized, and with the consumer's permission, we can look into that, and we can give you specific information as to, you will save $75 a month. And if you think about that, that's a lot of money for a vast majority of consumers. And you will say that over this duration, and this is the process that you need to do. And by the way, that process is greatly condensed because we already have that information on our platform, and because you've been a Credit Karma member and a TurboTax user for the last 10 years, that makes a difference. And I think that ability to give concise, personalized, targeted information to each specific instance, that is the AI platform, and that's the power that Intuit Credit Karma brings together, and that's what we're really excited about.
And Ken, just to pick up with that, when you look at the questions around expertise, with our live platform, we have an opportunity to syndicate that experience and actually have our experts be available at the point of need. In your example, you mentioned around investments. Well, I think if you think about the specialization of our experts and making them accessible on a platform that maybe already exists, or even a platform that we're expanding into, the live platform, the experts we have become a true opportunity for us. That's why you see us talk so much about matchmaking, making sure that the experts we have, the experts we hire, are specialized, they're trained, and they're prepared to have those kind of experiences and leverage our technology platform to amplify not only their experience, but also their humanity, so they can deliver that benefit of confidence at the point of need as well. So we do see those kind of opportunities for us in the future.
Got it. And if I could maybe ask Sasan or Alex a follow-up question, just more on the MailChimp side. I think the last year and a half, we've seen a lot of data restrictions. You've got Apple introducing fake emails into iOS, and just wondering if there's a potential headwind here for the MailChimp business, or do you see this as a potential opportunity as you guys start to blend some of these data sets longer term to drive value for customers?
Yeah, Ken, thanks again for your question. Let me get us started, and I'll turn it over to Alex. First and foremost, the real power of what we are doing across the company is leveraging our customers' data with their permission to actually fuel their success. And I think there are two things that are important in what I just articulated. One is permission, the second is success. And when you think about specifically your question around MailChimp, all we're really doing is combining the customer data and the customer list with purchase data. So if Alex were to come to the website and become a customer, we'll actually know if Alex bought something, what products Alex bought, and if Alex didn't buy, if we should go back to Alex and make sure that we understand why he didn't, or offer him discounts. So that's really the way we leverage the data. That doesn't really fall into the crosshairs of data privacy or security, or some of the what you cited around the recent Apple announcement. But with that said, Alex, I'd invite you to add your perspective.
No, Sasan, I think that's absolutely right. It's one of the things that gets us the most excited about the power of the MailChimp platform. They are leveraging data and AI connections that are far beyond just email. And so again, as a very specific customer example, if it's Cyber Monday and you're a small business and you're trying desperately to nail that Cyber Monday opportunity, the ability to target exactly who in your customer base are the right customers, send them a targeted message, whether it be email or text or however social method you want to, understand who's showing up, what they're putting into their cart. If they're abandoning their cart, leveraging that data and information to now be able to follow up with them and then have all of that data after Cyber Monday, the purchase data, come back through QuickBooks and through a combined end-to-end innovative platform to be able to now say, okay, what am I going to do the next week and the next week and the next week? That's the power of the data and the power of the platform, and that's what gets us excited.
Great. Thanks so much for your questions, Ken. Next question is going to come from Alex Zukin.
Hey, thanks guys for taking the question. I want to, Sasan, I want to first maybe start with you, just a really big picture question, because something you've been kind of saying over and over during today's event has stuck with me, and it's the fact that you're going from a piece of software that businesses and consumers ultimately use to react to events to actually software where you're enabling both people and businesses to act. And people generally pay more for software that enables them to act versus just react. So in connecting that to a financial metric, how are we to think about, ASRPC growth over the course of time? If you look at all the items that Michelle laid out, where do you see the most opportunities to drive that ASRPC growth in the future?
Yeah, Alex, good to see you, and it's a wonderful question, and I'll just state two things. One, it's actually the core of the shift that we are making from, and frankly, we are well into getting to the other side of that shift, which is going from really a tax and accounting platform to a platform that you can run your life and your business on the platform. And the second is a shift from a platform that is more interdata and you'll know how you're doing to a platform that actually delivers insights, value, and answers. That is why the core of our strategy and investments is about an AI-driven expert platform. It's to not only make that shift from the breadth and depth of what we provide customers, but to actually do it for them. And ultimately what that will mean for shareholders is, over time, durable, accelerated growth, much more of our growth even being highly reoccurring and subscription-based than it is today, but more of our services being used. One of the things I talked about earlier today when I was going through our FY21 reflections, one of the things that gets us excited about the future is we have such an incredible opportunity for deeper penetration across the board. And even with MailChimp and coming into our family and Credit Karma, whether it's deeper penetration in the financial products that we provide, deeper penetration and helping you run your business and use our CRM tools, to deeper penetration with payments and payroll, deeper penetration with tax revenue. And all of those things will translate, into highly reoccurring business, durable, accelerated growth, which means more of our services will end up getting used, and that drives ARPC. So that's how it all will come together in terms of sustaining and accelerating long-term growth.
Got it. And I'm sure we'll start parsing your words about durable, accelerated growth quite soon. But I want to ask about Credit Karma, because I think coming in, even before you made the MailChimp acquisition, one of the things we were all kind of waiting to hear, and we've heard today, is around all the synergies that you're unlocking, leveraging the Karma platform across the consumer, the SMB, even the free business or free users that you have. And I want to just get your sense from as a management team, where have you been most surprised by some of the synergies that you've been realizing to date across those business lines?
Yeah, thanks for the additional question. First of all, I would just start by saying there's what you choose to declare, then there is the management team actually believing as a team that the opportunity is there to fundamentally power prosperity for our customers. And so one of the things I really enjoy watching is how Ken and Mariana and Greg and Alex and Mark and the team interact with respect to what is possible and what we can do for our customers. And of course, then that role models excitement and clarity for their teams. That's really, really important, because you can declare things, but you also need excitement and buy-in. which is why, by the way, was not one of the first things on our list at the beginning when we declared our acceleration priorities, but it's actually why Ken and Alex got together and said, hey, let's actually roll out the Credit Karma platform as part of the payroll platform, because there are things that we can do together that we otherwise would have never thought about until a couple of years down the road. So that, I just wanted to start with what excites me. It's about how the team is actually working together in context of the priorities. I'll share with you, and I'm going to then turn this over to Ken. I'll share with you the biggest thing that I've actually learned from Ken and really the history of how they've developed their platform, which gets to your question around the biggest surprises. We look at opportunities to combine our platforms across the company to deliver for customers. And that is contextual awareness matters. So, one of the biggest things that we've learned is, Credit Karma's history, as you learned from Ken, is they went from credit scores to credit card products, personal loans, and eventually auto insurance, home loans, et cetera. But the contextual awareness of why am I here and why would I look to Credit Karma for auto insurance matters a lot. So that means that when we launch TurboTax as part of the Credit Karma platform or Credit Karma as part of the TurboTax platform, there are things that we need to do to ensure that the contextual awareness and understanding and benefit is there for customers so they begin to engage in what you have launched. So I want to first share sort of my biggest learning and surprise, which, by the way, is going to help us as we think about any new innovation across the company. But with that said, Ken, I'd love for the team here to hear from your words.
Yeah, absolutely. Well, first, I think there's the data synergy, right? And I think that is the opportunity that we talked about from a lending perspective to actually make transparency, to make certainty, to make simplicity happen on behalf of our members. I think that is very important. Next, when you bring in all the capabilities, right, you think about the $100+ billion of tax refunds each and every year. When you think about the $230+ billion worth of QuickBooks payroll, that is a hugely impactful aspect of Credit Karma Money. But let me bring it back to the most important piece. What we're able to do with the platform is we're able to transform a consumer's life. We're finally able to bring together all the disparate parts of a consumer's financial life and put it into an AI platform that actually changes the way that consumers think about money. Changes and removes all of the friction, removes all of the reasons why we don't do what's best in our own self-interest because there's too much work associated with it. And I think that is the biggest synergy, and I think that's the biggest opportunity because I think we're going to be the first company to realize that opportunity, to do it at scale, and most importantly, deliver impact to our members and customers. And that's what I'm most excited about.
Great. Okay, thanks, Alex, so much for all of your questions. Next question is going to come from Matt Pfau.
Hey guys, thanks for taking my question and just wanted to follow up with the comments around the acceleration for Credit Karma as well as the synergies. So the long-term target you put out there is 25 or 20 to 25% growth. I believe that's a bit higher than what the business was growing pre-acquisition. When we look at that acceleration, how much of that is driven by some of those synergies with other areas of Intuit's business that you called out? Versus gaining more traction with some of the non-core products for Credit Karma?
Yeah, thank you for your question. It's really both, and I'll put it in context of that one slide that we shared with all of you around horizons. There are things that are really driving significant impact and growth today in Horizon 1. There are things that we expect will be far more material in 18 months. And things that will be far more impactful 36 months out, from now. And so the long-term expectation of the 20 to 25% growth really takes into account all the possibilities of both new verticals and leveraging the distribution and the data and the platform capabilities of Intuit that now Ken and the team can leverage, but also the synergies that we walk through. So all of that is what informs, the long-term expectations. And, frankly, as we prove out things that are 36 months out from now, then we'll have a far better idea of what's the possibilities, even beyond the long-term expectations that we've shared with all of you.
Okay, thanks so much, Matt, for your question. Next up, we've got Brad Sills.
Oh, great. Thanks, guys. And thanks for all the information today. Great to see you all. Question on MailChimp here. When you think about the profile of the customer that values the front office with the back office suite, does that resonate more with that mid-market? In other words, could this accelerate your move into the mid-market with QuickBooks Online Advanced? They obviously have a higher international footprint. Maybe that suggests that these are larger businesses, larger organizations that could also, you could pull up market for QuickBooks as well. So just any commentary on how this might affect that move up market with QuickBooks Online Advanced into mid-market. Thank you.
Yep, sure. Let me kick us off, but I do want you to hear from Alex. The short answer is absolutely. But what we're very excited about is MailChimp actually helps us deliver for all small businesses, because what we've seen is if a small business is starting out, they ultimately need ways to get started. They need to get their business exposed. They need to get a website. They need to be able to get on different channels. And whether they're service-based business or a product-based business. And then, of course, as you become a mid-market customer, the need even becomes grander and more pertinent and more important. So the short answer is absolutely. We see it we always saw mid-market as a huge opportunity. It becomes even more exciting as we think about QuickBooks and MailChimp coming together, but it really also positions us to serve all customers from small to big, which is actually one of the reasons why we chose MailChimp. There are several distinct things that got us excited about MailChimp. One is their just pure scale, customer scale, data scale, and technology scale. Two, it's the breadth and depth of their product portfolio that allows us to do things that we never imagined possible. And ultimately, you combine that with QuickBooks, it allows us to serve both product and service-based businesses, small to mid-market. But Alex, I'd love to invite you to add to this.
Sure. So I would say something very similar. First, the simplicity of the product that MailChimp has been winning with for many, many years really gets us access to customers at their very beginning, right? Just when they're starting their business, they want to get online, they want to get those first customers. We can start with them and then grow all the way up. And it's very similar to how we thought about QuickBooks. We declared a couple of years ago when we launched QuickBooks Online Advanced that our customers love the platform, they love using the interface, they shouldn't outgrow us. And we can build the features and functionality to be able to allow them to continue to scale with us. MailChimp has done the same thing. They've started with a very, very simple product, self-service onboarding, but now have built the products and the technology to enable those businesses to be able to scale. I think as we think about the mid-market, the data integration is going to become more and more critical. Being able to tie together who are my best customers and what is their purchase data is what real mid-market companies are going to need. And we're going to be really the only platform out there that allows you to connect customer and purchasing data together and be able to get the insights that you need to be able to grow your business. So we think this will accelerate us into the mid-market, and we're excited to see those integrations.
Great to hear, guys. And then one more, if I may, just on MailChimp. When you think about the go-to-market for both products, it's primarily product-led, QuickBooks and MailChimp. QuickBooks, you also have that CPA channel, the influencer channel that you're famous for, a huge advantage. Are there any unseen channel synergies here between MailChimp and QuickBooks, either on their side or on the QuickBooks side, where you could accelerate, through a channel that's already available? It could be digital, or it could be, expert network channel.
Yeah, I'm happy to take that. So first of all, you're right. We have an accountant channel that has been a huge advantage for QuickBooks Online. MailChimp has a similar channel when it comes to their marketing advisory businesses. They have 20,000 partners from a channel that they've launched actually quite recently that are now helping businesses figure out how to grow. A small business may not be a marketing expert, but they want the advice to be able to come in. So we have channels on both sides. There's actually synergies between those two channels as well. All of those marketing agencies are small businesses. Many of those accountant businesses are trying to grow their customer base. So we think there will be interesting channels there. We also think just in general, you've seen us expand how our franchise is being viewed by customers. We are now that place that people are coming to for AI-driven expertise. And this may be not just how to run your business, but to grow your business as well.
Thank you so much.
Great. Thanks so much for the questions, Brad. We are now going to take our last question from Cash Rangan. Cash?
Hey, I've got 6 minutes with you guys. That's awesome. Congratulations on a terrific Analyst Day. Thank you, Kim, and thank you, Sasan and Michelle. I hope you can hear me okay. First, can you hear me okay?
Yes,
Just want to
perfect.
make sure that I'm not speaking into the wind. All right, okay. First question is, as I listen to the story today, I'm drawn to some really big numbers. You talked about $30 billion of fees that consumers pay in the banking industry. It feels like Intuit could potentially start to disrupt what we commonly believe to be a huge consumer financial services industry. Maybe the acquisition of Credit Karma has awakened your consciousness to more opportunities in what we consider to be traditional banking. Maybe you could just expand your thoughts on that, especially as we mull over your fiscal 25 and beyond targets. And secondly, Sasan, I wanted to get your thoughts on the whole movement to front office with MailChimp. Do you envision MailChimp going up market alongside QuickBooks Online Advanced? And also, as you give thought to how it's played out in the industry, generally the front office and back office players have been largely separate. It's been NetSuite and Salesforce in their respective domains. How do you change that industry order and make sure that Intuit can be the defining front office and back office platform for small businesses? Thank you so much once again.
Cash, great to see you. And I've always wanted at least 5 to 6 minutes to answer a question, but the team always tells me I'm long-winded. So let me take your second question, because then I'm going to turn it over to Ken for the first part of your question. First of all, depending on the size of the small business, we think this whole front office, back office it's the old way to think about it, not the new way to think about it. And that's customer driven, not so much just Intuit driven. When you spend time talking to these small businesses and these businesses that are in the mid-market that have several hundred employees, because of the power of the cloud, they're actually, more than 75% of businesses are actually looking to have the power of their data, their transactions, and how they run their business, in one place, so that they don't have to bounce back and forth between multiple platforms that don't talk to each other. And the talking is about their data, because they actually want to know what is going on in their business, who are their customers, who's the most profitable, where are there opportunities for wallet share increases, how do they compete with other small businesses or some of the larger channels. So when we take the insights that we are seeing and learning from our customers, and particularly what's happened in the last almost 20 months because of the pandemic, we have seen a significant acceleration to customers embracing virtual solutions, online solutions, omni-channel solutions, all in one place. And in fact, when they see that their data is in different places and they can't leverage the power of their data, it's one of their biggest frustrations. So looking ahead, it's no longer about front and back office. And the great news is that behavior is changing from the customer, which actually makes it easier for us to really solve their problem, because their mindset is already there. And that is the magic of QuickBooks and MailChimp coming together. And what you've heard Alex and I and others describe today, which is truly creating a platform that's customer-backed, that puts the power of insights and fueling your business in your hands. So we see that as a big opportunity for the mid-market, and frankly, all businesses, but particularly for the mid-market as we look ahead. And we don't believe, based on everything that we see, and we see it a lot with QuickBooks Advanced, we don't think we have a lot of convincing to do. It's actually what they want, and we're going to now be able to deliver for them what they're looking for. With that, let me turn it over to Ken to answer your first question.
Yeah, I love the note about disruption in this space. I think in many ways we've grew up in the category, and the way that we think about the opportunity is probably a little bit different than everyone else. From our perspective, people are reinventing banks, and that is great. But what a company hasn't done is really become the champion of the consumer. And by that, I mean, there is so much data that is being used to determine the eligibility, the profitability of consumers that bank use, machine learning, all the platforms, all the jargon that we understand as business people. Consumers don't have that same access. So our perspective from Credit Karma and our idea of disruption is, what if you put that power in the hands of the consumer? What if you take all of that data, the machine learning algorithms, the ability to save money, and you put the algorithm to help consumers save money rather than maximize profit? What type of world do you get? What type of relationship do you create with your members? What kind of value do you instill on the economy? And that's our version of disruption, and that's really what we're going after day in and day out, is to focus on how do you drive value for our members. And we think that, in a way, will drive an inordinate amount of value for Intuit, and that is our strategy moving forward.
Awesome, Ken, thank you. And since I think that was the last question, all of you have been so thoughtful in thanking us for today. On behalf of the whole team, we would like to thank you for investing the time in today, participating, and your wonderful questions, both in the platform immersion and the questions that you just asked a moment ago. So it was great to see those that we saw on the screen. Be safe, be well, and we look forward to talking to you again very soon. Thank you, everybody. Bye-bye.